Welcome to Rural Classroom Plus. This is Steve Barton, and thank you for tuning in. This is where we take your questions and we ask Rick himself. Rick, how are you, sir?
Doing very well, thank you. And thank you for your assistance with the Rural Classroom team for putting these on. I enjoy them, and by all indications, the audience enjoys them too.
I'm part of that crowd. I love them as well. I got to say, I took some of your advice on selling, and I sold some silver this week, or silver stocks. So thank you for that. It's having a monumental run here.
Well, I should say I didn't sell the silver stocks myself. I did sell in excess of 80% of my physical silver. And I should say, and I should have said at the time, I did redeploy some of that capital into the silver equities themselves. If the silver price holds, I think you're going to see the same sort of earnings surprises out of the silver companies that you've been seeing out of the gold companies. And so, you know, I think I got a lot of social media criticism for my silver sales, which tells me I did the right thing. You know, I cherish hate, and I've been getting lots of it, which is probably a good thing. It bears repeating that silver operated in a speculative part of my portfolio. I save in gold, and I regard gold as an insurance or savings or liquidity asset. I regarded silver as a speculative asset and do today. The fact that, and I checked, my average in silver was so low, I bought silver because I expected that it could go through 50, which it did handily, in fact, to 75. And so I decided that I would redeploy the speculative money because silver met all of my goals, reached every level of greed I had, and then some. And so I redeployed about half the money from the physical silver sales into silver shares. And I suspect if the silver price keeps up, let us say if it keeps even above 50, that you're going to see real surprises in cash flow and earnings in the silver companies. And so I made that shift. Also in silver news, I think it bears watching that one of the silver stocks that we've championed since it was $2.50, Aya, just announced today that 2 directors resigned and that the officers and directors as a whole sold well over $100 million worth of stock. That doesn't change the underlying valuations for Aya Silver. It changes the market's perception of it. But it's worth noting that that team still has in excess of 7.5 million shares themselves. Why did they sell? Well, if you were a founder of the company and your average is at 25 cents and you have the opportunity to sell in quantity, not in the aftermarket, but through a brokered distributed offering at above $20, remember in this business, you have never made the money until you have taken the money, which is what they decided to do. And something that the listeners here will need to do during the course of this bull market is decide when and in what quantum they need to take money off the table. We talked last week about having both a template discussion where I share with the viewers the memos that I write to myself when I buy a company, and also a discussion of selling, and I think that's fairly timely. I would also give you one more idea. One of the reasons why it was easy for me to sell my bullion is that because I'm an indirect bullion holder in a different way. I'm the largest shareholder, I think, of Sprott Inc. And Sprott Inc. Has about $60 billion in assets under management, growing fairly rapidly. Assets under management increases either through new security issuance or through the increase in price in the assets that they already hold, including at last count about $8 billion in silver. What's particularly cool about this is that by buying Sprott Inc. as opposed to buying any of their ETFs or trusts, you get diversity in the sense that you get the management fees on all of the products. When the silver price increases, the management fee increases. Not that the percentage amount goes up, but the fact is that they charge fees based on assets under management. And assets under management haven't been growing, they've been exploding. And the fee income has been increasing much more rapidly than the G&A has, which is to say, at the same time that their gross goes up, the percentage of that gross that they enjoy goes up too. I sort of regard my own holdings in Sprott Inc. as opposed to holdings in any of the individual assets that they manage as being the difference between Sprott charging me a management fee and Sprott paying me a dividend. I could either pay them 35 or 40 basis points in a physical trust, or they could pay me 1.5 or 1.6% by way of dividend. Guess which I prefer? And I would encourage our students to do that kind of analysis throughout their portfolio. Is there a more effective way to try and take advantage of the circumstance that they think will be coming down in the market for the next 5 years? If so, do it. There are often more intelligent ways to solve a problem than the way that we propose to solve it. And so keep your eyes open to all of those. Finally, I want to congratulate and thank all of you who attended the most recent Golden Triangle Boot Camp. I thought it was a great boot camp. I need to say I was particularly happy with Cody Penner's presentation about the fact that indigenous peoples in the Golden Triangle, far from being a risk, were an asset. But I thought the whole boot camp was great. I hope everybody agrees with me. I am 99% certain, looking at the feedback that we've gotten from various quarters, that the next boot camp will be around copper. That decision hasn't been made yet, but I think the probability is 99%, which is pretty high. And we're going to do a great job with a copper boot camp. We're going to do a really good job. That's a business that I've been around for about 50 years. I'm really happy with it. I'm allocating to it today. I have deep connections in the copper industry, so the course construction will be an easy thing to do. Remember that these boot camps, well, they're slated to take 8 hours of your life. That's wrong, because you can't really get your money's worth if you don't play the tapes. So think about sacrificing 16 hours of your life, and think about sacrificing $99. The $99 isn't a sacrifice. If you think for any reason whatsoever that we didn't deliver you value, we'll give you your money back. The fact that we've had to refund about 0.1% of the tuitions that we've charged tells you that most people, the overwhelming majority of people, believe that is well worth their while. At any rate, we're coming off a great boot camp, and we're coming into another great boot camp. If you care about the copper business, and you should, supply shortages are absolutely, positively inevitable and may be imminent. Tune in 90 days. I guarantee that we're going to do a good job. Finally, one more commercial, Steve. Many of you attended, either live or via live stream, the Natural Resources Investment Symposium in 2025 in Boca Raton. I think the best symposium we've ever done. 2026 is going to be even better than that. Attendance year on year, which is to say the number of paid attendees as of this date compared to this date last year, has doubled. So certainly certainly it will be well attended. Certainly there'll be a lot of smart people there. Whether or not you attend live or live stream, this is, I think, simply the finest natural resources investment conference on the planet. It comes once again uh, with a money back guarantee. Note that in prior years' symposiums, our most popular feature has been the Living Legends, where we assemble people who have built one or more multi-billion-dollar public companies and resources from scratch. And we ask them to describe how they did it, and importantly, tell them what lessons they learned that made them and can make you better investors. This has been an enormously popular feature for 25 years. We're expanding that feature in 2026 to the new legends. The problem, if any, with the living legends is that they're all my age. They're all long of tooth, short of leg. So what we're going to try to do, in addition, we're not going to get rid of the living legends. We don't do that. We're going to introduce you to people who are still in their 30s, 40s, and 50s, who have a couple of successes in their pockets, but are also people that you'll be able to invest with for the next 20 or 30 years. If I had to pick a real difference between this year's conference and the conference coming up, it's the fact that we're adding this new legends to our existing highly successful living legends format. I look forward to seeing all of you there, either in person or via live stream. All right, Steve, let's now that the commercials are over, let's talk about what the folks want us to talk about.
Okay. I like what you're saying about taking profits. I'm looking forward to that class. I guess I kind of did something similar because I sold some PSLV and I bought SILJ calls, long dated ones, leaps basically, thinking the same thing, that basically if there's good earnings calls, if silver could stay above $75 an ounce until the next quarter reports, those should be some really, really nice options to have, but we'll see. Maybe it's too leveraged.
People need to understand the potential order of magnitude of the earnings surprises. When you look at the Bay Street and Wall Street consensus gold prices that they're using in the earnings forecast, the last time I looked, it was $3,250. If your forecast is based on 3,200 and you sell the stuff for 4,500, a surprise shouldn't be surprising. And I think the same thing occurs in the silver space. Now, it's important to realize that the real gap up in silver has occurred fairly recently,
Yeah.
so it will not impact the whole quarter. But I'll tell you what, Steve, it'll help.
Yeah. It's not going to hurt. It's not going to hurt. When you were talking about Sprott, and it was a lot easier for you to sell the silver because you're such a large shareholder of Sprott Inc. Is that kind of like I picture that someone said this, I can't remember who, but it's like Sprott is kind of selling the picks and the shovels to the miners as they're walking into the gold mine. Is that kind of what it's like?
Well, in a sense, it's more like they're selling picks and shovels to investors.
Okay.
You and I could go to a coin shop and buy ourselves a kilo of bullion, and then walk down the street and go put it in a box somewhere. When we buy it, the bullion dealer in a normalized market charges us 3.5%. Right now, he or she would charge us 7 because of an alleged scarcity. When we sell it, we have to reverse the process. And in addition to that, we have to pay the storage, we have to pay the insurance, and we run the real risk of walking down the street with $5,000 or $6,000 worth of physical bullion that we run into somebody who we normally wouldn't invite over for lunch. What Sprott does is they take all that away from you.
Yeah.
The spread between the bid and the ask, which is to say the commission, is commonly 25 basis points in the New York Stock Exchange, as opposed to 7% going and 5% coming. And you don't have to arrange for your own storage. You don't have to arrange for your own insurance. So really, they're selling picks and shovels to investors more than miners. Your point is well taken. What's important to know is that the majority of their income comes from management fees on these passive products. And while the fees relative to the utilities that they offer are low, which means they're a good deal for the customer, if you do it in size, the costs associated with the providing of the service don't go up the same way that the fees go up. And all of that becomes margin. You can imagine the difficulty in running the Sprott Physical Silver Trust. If there's a bunch of orders, you go buy some silver. You get it delivered to the Royal Canadian Mint. And once every 3 months, you send KPMG in there and they go 1 bar, 2 bar, 3 bar, 4 bar. Not a very challenging task. 35 or 40 basis points isn't a lot of money until you charge on $8 billion.
Yeah.
Then it becomes a lot of money. And that's the silver number. Spread across the whole range of assets, Sprott's assets under management handily exceed $60 billion now. It is not a cheap stock, by the way. Their operating margins are excellent. Their capital requirements are effectively non-existent. And these charms have become understood by Wall Street. What Wall Street haven't factored in is how rapid the AUM growth is. If I'm right, and if we are in a precious metals and to come industrial materials bull market, I think, given how quickly they've gone through $60 billion in AUM, that they will be within 2 or 3 years at $100 billion in AUM, which means the management fees will be even higher and the costs will only be a little higher. At that point in time, it wouldn't surprise me if a very large financial services supermarket, a BlackRock, a Manulife, a UBS, somebody who forgot to establish a natural resource franchise when they should have, decides whether they want to spend 5 years building that franchise or whether they just want to buy Sprott. And I think they likely buy Sprott.
Okay. Yeah, I guess, from that perspective, as the assets under management increases, for Price Waterhouse to go in there and count twice as many bars is really not much effort.
Yep.
Yeah. Okay. All right. Okay. Let's get to some questions here. All right. Victor wants to know, could you share your latest thoughts on Petrobras and Ecopetrol? Are there any other emerging market oil names you like?
Ecopetrol, I don't follow because of the extreme amount of underinvesting that they're doing in sustaining capital. They're basically cannibalizing that company for the dividend. And that's not my idea of a good time. That seems to me to be an unsustainable current yield. Petrobras, I don't recommend, but I do own it. They also are underinvesting in sustaining capital and underinvesting in new project capital. They are swimming in cash, absolutely swimming in cash. And I own them because there's so much potential in the continental shelf around Brazil, in the subsalt, and even conventional oil and gas in the Campos and Santos Basin. So I think if they begin the process of making the sustaining capital and new project investments, they have the ability to grow very, very quickly. The current president of Brazil, Lula, the government being the largest shareholder in Petrobras, really doesn't care about increases in cash flow after he's out of office. The cash flow he's concerned about is his cash flow. And so the management team of Petrobras is under substantial pressure from the largest shareholder to increase rather than decrease dividends, and to decrease sustaining capital investments rather than increase them. Political pressure that is causing the management team of Petrobras to unnecessarily cannibalize the company. But I do own it.
Okay. Got a. Oh, can you turn down your speakers a little bit, Rick? I think we're getting an echo.
Yep.
Okay. Yeah, there we go. That's good. Okay. Stefan has a question about Dakota Gold. He's wondering if you. I was talking to Adrian about this. Comment on the metallurgy of Richmond Hill. Recoveries from the column only range between 61 and 65%. Is there any chance of improving on this?
Oh, yeah. Yeah, highly likely that they'll improve on it. This is fairly early on. I don't think they had an idea until 12 months ago that Richmond Hill was going to be the first development project at Dakota. The work that they have done on grade and size has been sufficient that now they go to work on recovery. The recoveries across the property boundary at Wharf are substantially higher than that. And there is enough contained gold now at Richmond Hill that increasing capital investments in process to increase the grade will be in everybody's interest.
Okay. Let's see. Rick wants to know. Rick, good afternoon. With the continued run up of silver, I looked up the largest silver mines and came across Bear Creek in Peru. Any thoughts?
Bear Creek is precisely the kind of company that will benefit from this increase in silver price. This is a very large deposit, but fairly low grade. And the challenge with Bear Creek has always been the conjunction of the very high upfront capital cost to build it and the long payout that would occur as a consequence of lower silver prices. It was, if you will, the classic optionality stock. If you believe that the silver price is going to hold above $50, Bear Creek is a place you want to look. Now, understand, Peru is a place in conflict. The mining business has treated them well for the last 10 years, but there's always been substantial local opposition to mining in Peru, mostly because the social rents, the taxes, the royalties, the various forms of government theft have mostly accrued to the capital, Lima, leaving the regions to bear the cost without the concomitant benefits. And the NGOs, in particular Oxfam, a British organization organized around making people poor, has done a good job mobilizing local opposition to mining in Peru, including in the region around Bear Creek. But Bear Creek, although I don't own it, is, I think, a very good speculation on higher silver prices. Pardon me.
Okay. Speaking of silver, Richard has a question. He says Rick has named his favorite silver plays before. Would you mind going over those and current rankings?
Yeah, it really depends on your preference. I still own Industrias Peñoles, which is the Mexican firm that controls Fresnillo. I do it despite the fact that the current president of Mexico, who is anti-mining generally, allegedly has personal antipathy to the leadership of Fresnillo. Fresnillo is cheap, but it exposes you to a level of political risk that many of you might not want to take. A tamer approach to Mexican political risk is probably Pan American, whose Mexican assets are lumped in among assets in other parts of the world, but include MAG, which is Fresnillo's partner at Juanicipio. Pan American isn't a pure silver producer in the sense that 55% of the revenues now come from gold, but its 20-year duration as a silver producer means it has a large silver constituency. And importantly, it has two different 500 million ounce high grade silver deposits that, for political reasons, aren't in production. You don't pay for these. This is an option that may pay or may not pay, but it's free. My premier silver investment also isn't silver investment. It's Wheaton Precious Metals, which used to be Silver Wheaton, the largest silver royalty and stream operator in the world. Wonderful job of capital efficiency, not leveraged to silver, simply a very, very, very fine company. I own a Peruvian stock called Buenaventura, which again has a wonderful inventory of silver, but exposes people to political risk. Ironically, I don't own the leveraged North American silver names. I don't own Coeur and I don't own Hecla because of historically very poor capital allocation decisions. A rising tide floats all ships, however, and these have wonderful franchises. I own a little bit of First Majestic because it got sold off in such ugly fashion. I was waiting to take a more full allocation until they either did or did not solve the problem at Jarrett Canyon. Obviously, a decision on my part that has been costly given the silver price. I own Silvercorp. Your political risk here is largely a Chinese political risk, which is to say they've had to be, by necessity, very opaque about their operations in China. I'm delighted to say that I was the person who took Silvercorp public, and my dividends now exceed the price I paid for my shares in Silvercorp. It's been a very, very, very good long time speculation. Speaking of speculation, I continue to hold some Aya, been a spectacular performer. Rule Classroom members will remember that we had Benoit LaSalle on the Rule Classroom to defend himself against the allegations made by short sellers. It would appear that he was right and they were wrong, given the last quarter and given the 100% share price appreciation since we had him on. I also own shares in Abra Silver, consistent exhibitor at our symposiums, and Vizsla Silver, both exploration stage companies that I think are fine bets on silver. I own a bit of another leveraged aspirant, this being Cerro de Pasco, which has a very large resource base in tailings, but a lot of work needs to be done. That's sort of my leveraged call on silver.
Okay.
I probably
There's
have
no shortage there. Pinole, Sweet and
my head, I
Precious.
can't dredge them out.
What was that?
So I probably have more, but off the top of my head, I can't dredge them out.
Okay. No, that's quite a list there. Pinole, Sweet and Precious, Pan American, Buenaventura, First Majestic, Silver Core, Aya, Abra, Vizsla, and Cerro de Pasco. All right. Well done. Okay. BMO wants to know, thank you for your time. Rick, the first question is with regards to Peter Cundall. His book says that once he learned the value of investing, he felt destined to do it. Do you think people should choose careers primarily based on interest or their competence and aptitude, especially if those point in different directions?
I think it depends on what people want out of their life. For myself, I had no choice. I was highly successful as a young man in the restaurant and bar business, but I was miserable doing it. I wanted neither to be miserable nor to fail. And I was afraid that because I was miserable, I would end up being a failure. There are a lot of people, and there's nothing wrong with this, that want a job that sustains their lifestyle. These are the people who work to live. Then there are people like me who live to work, people who failed retirement. Uh, I don't know how to talk to people who want to get by, want to achieve as much material well-being as they can with as little input and effort as they can. So for me, I need to do something that inspires me. My wife told me early on in our marriage that she thought that if I didn't worry about money at all and worried about being the best version of myself, delivering as much utility to my customers as was humanly possible, that the money would take care of itself. And that's certainly in my case occurred. There's another class of person who is really truly interested in getting ahead materially, but doesn't care about adding value. I liken those to the people who are in business so they can buy a Lamborghini. I never aspired to a Lamborghini. Maybe owning a Lamborghini dealership, but living wealthy was never of any particular importance to me. Being wealthy was extremely important. If there are people who are doing jobs that they are miserable at because they think they're going to make some money at it, that's happened. I mean, I remember a few folks at Goldman Sachs who were like that, but they were miserable people. So I wouldn't urge that course of action either. I'm delighted, by the way, that people read Peter Cundall. Peter is largely responsible for my successes and should bear no responsibility whatsoever for my failures. If I had merely observed the lessons taught by Peter slavishly for the last 50 years, I would have worked less hard and been further ahead.
I've noticed that recently in my life, the less I focus on the numbers and the more I focus on providing value, the more money you make, you know?
Absolutely. Absolutely. You know, when Bonnie told me about that, the year would have been 1989 or 1990, when she really convinced me just not to worry about making money, to pour my heart and soul into securities analysis, building my business, and delivering the results of the securities analysis. literally, the financial results came in the first quarter.
Yeah.
It was astonishing. It was truly astonishing.
Yeah. Yep. Yep. That is exactly what I recently learned. Okay. Chris wants to know any thoughts on Equinox, Brazil asset sales while continuing in Mexico and Los Filos?
Yeah, I mean, following the Ross Beatty recipe, if Ross does what Ross does, it is likely that he will continue to sell second or third tier assets. The Mexican assets should be sold. They're a distraction. Ross and his team do not have the ability to deal in those communities, particularly with the narcotraficantes. Ross is a nice guy. You need a rough guy. And I think if they have the ability to buy another tier one asset, what you'll see is that they will do a transaction that will scare the hell out of the market because it'll be a big transaction. And they'll finance it, hopefully by selling off California and Mexico. What Ross does is he starts a project, he starts a company by identifying tier three assets that he can buy and fix. When he has fixed them, he focuses his eyes on better assets, buys those, and either builds or fixes them while selling off the third tier assets. I've watched him do this now for 40 years. So Bay Street is focused on him becoming a 1,000,000 ounce producer, and I think he's a 950,000 ounce producer now. It wouldn't surprise me to see him sell off 200,000 ounces of annual production, falling back to being an 800,000 ounce producer, but upgrading his overall portfolio.
Okay.
I'm still holding my stock. Longtime members of the Real Classroom will remember 3 years ago when Ross was in the penalty box because they were behind schedule and over budget in Canada. My saying that I suspected that once they completed the thing, and particularly once they shook it out to nameplate capacity, that the cash flow growth that they would enjoy with that asset would kiss all the sins and make them better, which certainly occurred. The stock has been a pretty solid triple since then, and I suspect that the share price ascent will be less dramatic than it has been, with the exception that this will really be one in the next quarter or 2 quarters that benefits from low analyst expectation, and can benefit a lot from the reality around the gold price.
Yeah. Yeah. I got in around the same time, $5-6. It's up at almost 15 now. And that's exactly what I'm hoping for that next quarter. I am hoping for that. I think it'll be awesome. Okay. Sam wants to know, hi, Rick and Steve. Thanks for doing this. You're welcome. Have either of you heard any updates pertaining to the sale of Victoria Gold's Eagle Mine?
No. I think this gold price helps a lot. Eagle was a mine that should not have been built in the gold price environment that was built in. There were, of course, some engineering problems that led to the bankruptcy of that. Make no mistake, with the sunk capital there and with the operating experience they have, at $4,000 gold, this is a great mine. Not a great mine, a good mine. And this will certainly be bought out of receivership and operated. I don't know who's going to buy it, but somebody who wanted to grow or continue to grow in the Yukon so that they could use this asset to begin to develop hub and spoke capabilities in the region would likely benefit. It's also worth noting there's a lot of people in the Real Classroom and attendees at our conferences that have become, as a consequence of our urging, perhaps, shareholders of Banyan Gold. Banyan's right down the road. It wouldn't surprise me at all. This is not a prediction, but it wouldn't surprise me to see whoever takes out Victoria, after they get a couple of good quarters in, after they see that they can make it work, It wouldn't surprise me at all to see those same people consolidate the district by taking over Banyan. The idea that you could begin to backfill that mill with some of the 7 million ounces down the road at Banyan would seem to make absolute sense to me.
Yeah. I'm literally betting on exactly that. Okay. David wants to know about Perseus Mining and its current ranking.
I don't have a ranking on Perseus. I am looking at Perseus. I get urged periodically to do something with Perseus by my former colleagues at SCP Capital Partners. Thus far, I've been unimpressed with the capital efficiency there and with the all-in sustaining capital. Certainly on a valuation basis, which is to say cash flow relative to enterprise value, they're attractive, but it has seemed to me to be a collection of tier two mines. I'm told by people who I respect that I'm wrong, and so I'm keeping my mind open to be educated.
Okay. Um, Bill wants to know, good afternoon. Can Rick comment on Bravo Mining?
I didn't participate in the last financing, um, partially because they didn't reach out to me. I think I was part of the company's past in their mind, not so much of the future, although they will be an exhibitor in Boca Raton 2026. This is one of the best undeveloped platinum palladium deposits in the world with pretty attractive byproduct nickel. In addition to that, there's exploration potential, upside exploration potential from a different form of mineralization, iron oxide, copper, gold, on the same concession. I'm not saying this is going to work, but this is spectacular exploration upside that you get absolutely for free. This was a project that I liked because of its size and grade at platinum prices that were approximately half of today's platinum prices. So if if I like the thing in that price environment, I got to love it in this price environment. They went to tap capital markets earlier this week in conjunction with the strategic private placement and upsized the offering by 50% in the face of demands, which I guess will tell you why they didn't need to call me. Um, this company's firing on all cylinders.
Okay. All right. David wants to know, he says he hasn't heard you talk about Go Gold for a while. Any comments and current ranking?
I have Go Gold as a 5, waiting for them to get their permit. And I think it's when they get a permit. My understanding is that there are 6 major mining permits on the president's desk in Mexico, and her government has committed to permitting all 6 of them. The determinant, note that she is anti-mining. She's very anti-mining. But note that she's also aware of local politics. And in many parts of Mexico, including where Go Gold is, the only economic activity that's viable locally is mining. And she has said that mines that enjoy local political favor will be permitted. So it is our belief that Go Gold will be permitted. It's my belief that this won't be a gold mine, but will rather be a gold camp, that their concession will have 2 or 3 or 4 mines on it. It's also worth noting, and I was a huge skeptic of this, that they have a tailings reprocessing plant in the northern part of Mexico. I consider it a distraction. It's a distraction that's generating between $500,000 and $600,000 worth of free cash flow per month, which is to say it's a distraction, teasing myself, that funds literally all of their general and administrative expense. I have them as a 5, assuming that the price doesn't go crazy. I'll very likely upgrade them to a 4 when there's certainty around permitting.
Okay. All right. Josh wants to know about Power Metallic Mines. You follow them?
Don't know enough to comment.
Okay. Can Rick give his latest comment and rating of Gold Royalty Corporation?
I have Gold Royalty as a 5. It is, I would suggest, becoming fairly fully priced. The thing that's, well, there's a couple things attractive about Gold Royalty. Unlike most royalty companies, they're not passive. The management team here, led by Mr. Garofalo, who I've known for 30 years, is actively involved in trying to beneficiate indirectly some of the properties. Rather than waiting for other people to develop it, they're trying to make things happen. In addition to that, there was a large recent investment in gold royalty on market by Tether, the people who did the very large private placement in Elemental EMX. And there's been some fairly public noise from Tether that they would like to see the best of the third tier royalty and streaming companies merge to create another high quality mid tier royalty and streaming company. Somebody that would occupy the space occupied by, say, the Triple Flags.
Yeah, I was going to say Triple Flag. Right.
Or the Osiscos of the world. I think this is a good idea. And I think Garofalo's sort of lukewarm response to this has to do with who might run it. He would prefer him. And also to do with the fact that he's probably, as will everybody, beginning to negotiate price.
Okay. That could be interesting. All right. Han wants to know, Rick, could you please comment on Largo? They're working on doing some studies for recovery of copper and platinum group metals. Is this a game changer for the company if they can make it work? Thank you.
Well, if they can make it work, it's always a game changer. I'm leery about process and technology. If your existing operations don't work, I wonder why you didn't fix them 5 years ago. Largo is a wonderful call on the vanadium business. The vanadium business, since I got involved in Largo, has been a terrible business. The longer it's a terrible business, the sooner it becomes a good business. But Largo needs a major refinancing. And I'm not going to touch the stock again until that's occurred. If the pricing around that financing is attractive, I may be a participant, but I'm no longer a shareholder.
Okay. Atex Resources. Josh wants to know, have you seen their latest drill results?
Sterling. Yes. Yeah. I mean, Atex and Marimaca. I mean, there's a lot of copper explorers that are starting to punch a bit above their weight, but I would point particularly to Atex and Marimaca, given the recent elections in Chile and the certainty with regards to the regulatory and fiscal regime in Chile, and the incredible infrastructure with regards to copper that Chile offers up.
Okay. Zahara wants to know, could you share your thoughts on America's gold and silver, please?
I missed American gold and silver. It seemed to me like a collection of speculative assets. I didn't understand the consolidation strategy that America's gold and silver had, and their moves to consolidate as much as possible of the Silver Valley, that stretch of Idaho going from Coeur d'Alene, through Wallace and Kellogg, is impressive. I haven't reviewed it well enough to change the ranking, but I'm impressed with the moves they made, and I'm impressed with the new scope and scale of the company. I need to say I don't own it.
Okay. David wants to know if you're still loving Meteoric, Sovereign, and Centaurus. Any new updates?
Yes, and yes. Understand the thesis. Don't pay attention to the names. Pay attention to the lesson. Each of these companies controls what will arguably be Tier 1 deposits. Tier 1 defined as in situ recoverable reserves and resources in excess of $10 billion, lowest cost quartile in their sector, and highest return on capital employed quartile in their sector. Each of them is depressed in price because their sector is depressed and because they operate in countries, Brazil and Malawi, that are not mainstream countries. They are also all depressed because of the uncertain pathway to production. I own them because I believe that my downside in any one of these companies individually is between 50 and 60%. By the way, for rational speculators, 25%. I just own a very, very, very large chunk of each of these. And if I began to perceive failure, it would be hard for me to move my stock into the market efficiently. Juxtaposed against that 50% potential downside, I see 15 or 20 or 25 fold upside, not percent, but fold. It wouldn't surprise me in any of these companies to see them ultimately taken over for billions of dollars.
By like BHP or something.
Yeah, I mean, lots could go wrong between now and then. Don't get me wrong, lots could go wrong. There's a lot of risk. There's going to be a lot of volatility. It's going to take a lot of patience. That's ideally suited to a guy like me, where I can allocate a reasonably large sum of capital, not so large that I can't afford it, where my primary enemy is time, and where I need to monitor the progress fairly quickly. Those are all things I do well.
Yeah. Okay.
For people who require the ratification of their investment by price action between now and Easter, these are the wrong names.
Okay. Okay. Oh, did you see the news on Glencore and Rio Tinto? Looks like
I
they're
did.
talking again.
Yeah, it's been on and off again for 5 years.
Yeah.
I think it would be wonderful. I think if you take Rio's iron cash flow and Rio and Glencore's coal cash flow, and you use that to build out their copper pipeline over the next 10 years, that it's absolutely a marriage made in heaven, assuming that when they merge the company, they don't keep all the managers from both sides. One of the nice things that happens for shareholders in a merger like this is that you reduce your G&A fairly dramatically. Of course, the people who constitute that G&A that gets replaced are less happy about it than the shareholders are. A larger company with larger market capitalization enjoys greater trading liquidity, and hence higher share price and a lower cost of capital too. But the real synergy there is using that diverse cash flow, iron on the one side, coal on the other, to build out what is already very impressive copper pipeline. This would create the largest mining company in the world were it to occur, eclipsing BHP.
Yeah, it'd be over 200 billion. Maybe 250. I don't know. Putting myself math in public is never fun. Okay. Nicholas wants to know any thoughts on Brixton Metals?
None.
None.
Don't know the company well enough to comment on.
All right. Oh, this is kind of interesting. Okay. And Antia wants to know, hi, Stephen Rick. What does ExxonMobil now have? Does ExxonMobil now have a competitive disadvantage as Trump was angered by the comments of the ExxonMobil CEO on investments in Venezuela?
Yeah, for a week. Exxon can go buy some Trump coin, and all of a sudden they'll be back in favor.
Okay. Doesn't look like the share price was affected. I was just looking at the.
I mean, that's worth commenting on. We've had a news trade in the oil business. Macro news trades are almost always the dumbest trades in human history, because the news they talk about plays out over 5 or 10 years, by which time there's a different piece of news that's come out. The whole oil complex has traded up from the low 50s to the low 60s as a consequence of perceived political change both in Venezuela and Iran. In the case of Iran, that change may or may not occur. Understand that they deal with dissent in Iran with 180 grains of lead at 2,200 feet per second through the temple. So we'll see where that goes. Should regime change occur, nobody knows what follows. Nobody knows what impact that'll have on Iranian supply, but it will have no impact on the fact that Iran has underinvested fairly substantially for years in sustaining capital investment. They won't be able to ramp up their production quickly. Similarly, with regards to Venezuela, people talk about regime change, except the regime hasn't changed. The head thug got kidnapped, but all the sub thugs are in place, and they aren't making friendly noise. It might be that Mr. Trump can say to them, you can continue to stay in power, you can continue to loot, I'll permit you to buy condos in Miami and all those things you want to do, but you take orders from me, not Maduro now. That could happen. But still, you have a circumstance. And we talked about this last week in our discussion, Steve, you may recall. It's still going to require billions and billions and billions of dollars to impact supply.
Okay. Han is referencing First Majestic Silver here. He says, if silver prices remain at current levels, the company could generate more than $1 billion in free cash flow annually, while its enterprise value is around $10 billion. So 10 to 1. How should silver miners typically be valued? Is a 10 times free cash flow multiple considered reasonable in this sector?
It is considered reasonable by Bay Street, and it's a really stupid metric because it doesn't take into account reserve life. You could have with a very short reserve life that's delivering $1 billion a year for 3 years and is valued at $10 billion, which means that you have 7 years of penury after 3 good years. The correct way, and this goes to a course that I know people have been bugging me to do, valuation needs to be done on a net asset value to enterprise value basis. And it isn't really that simple. Net asset value is usually a net present value test, but the discounted net present value test leaves off the tail, the cash flow tail. Cash produced after 8 years doesn't have a net present value until you receive it, in which case it has a great net present value. And it also doesn't take into account reinvestment. So in addition to looking at net asset value to enterprise value, you have to look at the company's recycle ratio. Recycle being the amounts, the number of units of reserves that they can add for the margin that they receive for selling 1 unit. As an example, if First Majestic sells an ounce of silver, let's keep the math simple, for $50, and if their cost to produce that ounce of silver is $25, their gross margin is $25. Recycle ratio would be the number of ounces that they could add to the balance sheet, either through acquisition, exploration, or development, on the margin, the $25 from the last ounce. Traditionally, companies whose recycle ratio is 1.25 to 1.3 are companies after G&A that are described as having positive recycle ratios. In the silver business, almost everybody in the business, with the exception of the top 5 or 6, have negative recycle ratios. So it's important to know that.
Okay, thank you. Look forward to that class up in Colorado. We'll learn all about it.
I think we mentioned that isn't going to be a 2026 class. It's going to be a 2027 class. There are 2 reasons for that. My appetite for that class, which is to say the things I want to teach, is excessive relative to what I can get taught in 5 days. And so the curriculum coordinators at the Colorado School of Mines are busy beating up on me in terms of what the course architecture looks like. So the course architecture hasn't been set at all. It's a wish list, and the people who have to deliver my wishes are trying to disabuse me wisely of some of those wishes. I have to pick and choose. The second thing is that the only time available at the Colorado School of Mines for an on-campus course this summer coincides with our conference in Boca Raton. So by looking at 2027 at the Colorado School of Mines, I really have my pick of times, which is important.
Okay.
I should also tell people, if you're thinking about attending in 2027, there will be a couple types of lodging options. One will be dormitory accommodation at the Colorado School of Mines. This will be attractive from a financial point of view. Those of you who remember what your college dorm accommodations were like will understand what it'll be like from an aesthetic point of view. There are limited options for reasonable lodging in Golden, Colorado. when we announce the course, we will block probably 100 rooms in Golden. And when those are sold out, people who want to attend will either have to go to West Denver or they'll have to go up to Boulder. There really is, for those of you who are familiar with Golden, it's a wonderful, wonderful, wonderful town, but it's a small town. There's a paucity of high quality accommodations. And if I block 100, that means that there's 99 left for y'all because I'm going to have to stay in one of them.
Right on. Okay, wrapping up here, we're pulling the questions from the Rule Classroom Plus. So if you guys are watching on YouTube or LinkedIn or any other outlet, that's where we're getting the questions from. BMO has one here about how do you deal with fallen angels, meaning CEOs and teams where trust was damaged? How strict should you be? And what would you need to see to re-underwrite a team that you'd lost confidence in?
If they lied, they're done. If you can't use the information that they gave you at face value, you're never going to be able to analyze the company. So they're done. And in their next incarnation, their next company, they're done there too. And if they somehow survive 3, they're done a 3rd time. If you have a circumstance where a company has made best efforts to achieve something and they failed and they fixed it, say Equinox, that's a very different circumstance. Very different circumstance. Were they honest with themselves? Were they honest with me? Was the mistake cultural, or did it come with the territory? If you look at the history as an example of the Abitibi, the Canadian Shield, the track record of the industry for delivering a project on time, on budget, is almost unblemished by success. The fact that Equinox couldn't do it disturbed me, but it didn't disappoint me necessarily. It's kind of what I expected. The duration of the miss was a problem. But when I would talk to the company and talk to Ross about the nature of the failure, it was pretty certain to me that they understood the failure and that the the processes in place to ameliorate the failure were good. And the consequence of that was that I certainly gave them a second chance. Similarly, very recently on BNN Bloomberg, I made as one of my picks for Canadians B2 Gold, who have certainly stumbled in their construction efforts in northern Canada. And we're also in the penalty box as a consequence of being in Mali. I would have said that their performance in Mali was a strength. They were able to, Clive Johnson at 70, was willing and able to fly to Bamako, the capital of Mali, and stay there till he hammered out an agreement with the Malian government. No drama, no press, no arrested officials, no stolen gold. The fact that the market didn't appreciate that performance is astonishing to me. It just shows in the near term there's a lot of stupidity in the market. So I'm, in answer to the question, depends on the nature of the failing.
Okay. I got something from you, and I do it on interviews or when I'm just talking to them at these conferences. Is you can get a decent amount of information online, and you can ask them right there at the booth something that you already know.
Yep.
Where it would be beneficial for them to maybe fudge the truth a little bit, and you can eliminate some companies quickly like that.
It's really good to give somebody an excuse to lie to you and see if they take it.
Yeah. Yep. Okay, we are tapping on the hour here, sir.
Steve, I'll give you another tip too that's worked for me.
Okay.
We're at it. Ask them when you interview them the 2 or 3 things that are most likely to go wrong are. I reckon if there aren't 3 different things that keep people up at night, they don't know enough about their company to do the deal. And I want them to identify them for me, and I want to know that they've identified them. A whole bunch of times in my life, I've asked somebody what can go wrong, and they say, well, I don't really know. And that tells me that they're either being disingenuous with me or they're stupid. And those are two bad choices. When I talked to Ross Beatty not too long about what could go wrong, he said, "Oh God, how much time do you have?" You know, I mean, not that everything's bad. It's just he's a realistic guy, you know?
Yeah, yeah, yeah. Doug Casey told me something similar. He said at the end of the interview, ask him what could go wrong, and then wait for them to tell you, and then say, what else could go wrong? And he's, oh, the second one is what they're really worried about, not the first answer.
I always tell them to give me 3.
Yeah, okay.
For no particular reason other than my grandfather once told me, if I didn't know 3 things that could go wrong, I didn't know enough. So that just stuck with me since I was a kid. There's nothing magic about 3. It's just my habit.
Okay, okay. All right. Any final thoughts?
No, listen, we've had a hell of a 2025.
Yeah.
It's unlikely that 2026 is going to be as good. So don't hold it to the same standard. Remember, too, how you felt in 2021, 2022. Remember that you have to shift money around to find relative value. Remember, too, that you haven't made the money until you've taken the money. Do not succumb to fear of missing out. If you have a real reason in your mind why you think silver should go from, say, $90 to $130, let's say that you believe in a structural short squeeze or something like that, that's okay. But if you aren't selling silver after it's had a 300% run up, just because you have a fear of missing out, that's not okay. Well, whatever you want to do with your own money, lose it all. It's okay with me, but it shouldn't be okay with you.
Okay. Don't have FOMO, and don't be afraid to press the sell button. That's what I hear you saying.
Absolutely. Don't be in a hurry to push the sell button. There are circumstances that get better and better and better. That's seldom the case with a commodity, but with companies, there's companies that get better and better and better and better and better. So don't sell reflexively because the stock's gone up. Always understand that money's made on the delta between price and value or anticipated value. Keep doing those calculations and you'll do okay. Default to any other decision-making mechanism, and over time you'll do poorly.
All right. Thank you very much, Rick. This is always a lot of fun. You guys can come over to the Rural Classroom. Next up in the pipeline, next week on Tuesday at 12:30 Pacific time, we'll be pulling up the charts for an hour and looking at charts as they trade live on the New York Stock Exchange. And I'm not sure when our next Q&A, Rick, is, but I always enjoy these. We try to do 1 or 2 a month, and it's a lot of fun. So thank you.
I think next week gets in the way of either Metals Investment Forum or Vancouver Resource Investment, something like that.
Anyway, yeah, that's right.
My tired old carcass will be out of the office. So
okay, all right,
okay.
Awesome. Well, thank you very much, Rick, and thank you to everyone for being here. You have a wonderful rest of the week, and we will talk to you next time.